Hello, I'm Steve Garth. Today I want to talk to you about volatility. When markets are volatile, it can be very unnerving for investors, but there are ways to deal with it. So we're going to look at a few pointers to help you get through those volatile times. Now the chart I'm putting up now shows you the US stock market over the last 5 years. And the top line represents the performance of the market, while the bottom line there represents the volatility. Now you can see a few spikes in the volatility, and you can see the corresponding effect it has on the market. Now market prices change daily as new information comes to the market and as expectations change. All in all, though, if you had ignored those spikes in volatility, you would have had a pretty good outcome over the last 5 years. Now, if we have a look at the first 6 months of 2020, you can see this very big jump in volatility and corresponding the markets falling as investors are pricing in the effects of the global pandemic. Following, there's a big jump in the market as government stimulus happens, and again investors are pricing in the effects of that. It's a period of great anxiety and uncertainty, and of course it still is. But here are 5 ways that can help you get through volatile markets. First of all, remember that markets and economies are different things. The stock market is pricing in 1, 2, 5 years down the future. Well, when you look at economic data, it's the data that's happening right now. Secondly, it often looks like market timing should protect me from volatility. In other words, if I can get out before the market falls and get back in at the bottom, how good is that? Of course, market timing is nearly impossible. Warren Buffett has said, I don't know how to time markets, and I don't know anyone who does. The third point is always remember that in falling markets, there's always going to be a buyer. Someone there thinks that the falling price is actually good value, and often those investors are the long-term investors. If you ever hear the media say that there were more sellers than buyers in the market today, that's ridiculous. For every seller, there must be a buyer. Number 4, remember that diversification can really help you get through periods of volatility. Not only being diversified across your equities into different markets, but also being diversified across the asset classes. Having bonds and equities can moderate the volatility of your portfolio. And finally, most importantly, discipline is rewarded. We just saw before that by sticking through the last 5 years and the spikes of volatility, you had a good investment outcome. And sticking through the first 6 months of 2020, you've still had a good outcome in your investments. To really make the point about discipline being rewarded, have a look at the chart now of the US stock market and corresponding volatility over the last 30 years. And here we've marked really significant global events on that chart. Now, these have been periods of enormous anxiety for investors, enormous uncertainty. But what you can see is over the long run, despite those huge jumps in volatility, the disciplined investor has been rewarded. So, 5 ways to help you deal with market volatility. Now remember, volatility, it's an expression of uncertainty in the market. Markets move on new information and new expectations every day. The price is just the aggregate view of all investors. So unless you know something that nobody else does, you're unlikely to be able to time your exit or entry point. Reacting impulsively to market movements, it's nearly always counterproductive. What matters for the individual investor is whether they're on track to meet their long-term goals in a plan that's been designed for them by their financial advisor. It's the long-term returns that count. Volatility is not necessarily a risk, even though it does create anxiety. As always, a financial advisor can help put you in a portfolio that will achieve your goals and help keep you disciplined when markets go up and when they go down. I'm Steve Garth, and I look forward to chatting to you again soon.